Hello and welcome to KYC. I am Sharad Dubey and let's start the show. Welcome to NDTV Profit. And first of all let's guess the company for our segment KYC. There are some hints which I had given earlier and I'm going to repeat them. It's a recently listed small cap IT company, but interestingly, it works in the education segment, offering a lot of digital solutions in this segment. It also includes learning. But the stock is down 25% since its listing in November. It's a newly listed company, hardly a history of 2 odd months coming in, and that company would be in focus. And the company is Excelsoft Technologies. That's the first question we'll be asking. Why are we getting this company just after its IPO? What's the important news flow coming in? What will be the sustainable margins and revenue guidance for the company? That's what we are interested. Company recently come out with its Q2 numbers also. Further acquisition plans in the edtech space, company had mentioned. So we'll be asking them because company is having a significant cash buffer as well. IPO proceeds was largely used on the Mysuru property. So some unanswered questions are there regarding the proceeds and what the incremental benefit would be coming in. AI Levate, that's a new product which I saw in the presentations. What will be the contribution for this? Because AI is very much important for even a product related or a SaaS company like Excelsoft. And which geographies will the company target? The expansion part. Generally, we see the American, European markets are there, but are they targeting some other markets? Is the Asia or Middle East region? That is something which we'll ask the company and their expansion plans as well. So these are the key points which we will be actually looking out for. But going ahead, let's just give the more details about the company. It's a very newly listed company, I would say. So there is still requires some time and effort to actually understand what this company is all about. The company was founded in June 12, 2000. That's an interesting date as well. That .com bubble crash area time was there. Also looking at the company, they're focusing on assessment, proctoring and learning solutions. Proctoring is of course there for interviews. The location is based in Mysuru headquarters. The office is also there in Noida and Hyderabad. That means they are expanding geographically also. Looking at the growth highlights, the revenue was 195 crores in FY23 to FY25. That has gone up, not significantly, but yes, a decent growth, 233 odd crore rupees. Same story goes for PAT, but PAT has done well. So we will be of course asking why this has gone up. Core business is the vertical SaaS, software as a service company, and this is for learning and assessment. That's where we will be looking at. Also, the company serves enterprise clients. The B2B SaaS, it's one of the safest options for a product company, and 103 clients coming across 19 countries. This number is expected to change. Almost 19 employees are there as of September 2025 as well. Also looking at these numbers, cloud-based platforms, they are there, and open APIs are there. These are building blocks basically for a solutions bed company. AI-based products and a scalable architecture, that is something which you'll be looking out for. 24 clients as of now, the latest quarter. And interestingly, I've seen their clients' relationships are at an average 9 to 10 years. So that is a customer stickiness where you can cross-sell higher margin products also by definition. And the main offering is Saras e-assessment platform. That is a very important thing to look at. They're supporting test creation, marking reports, and entire testing in the education sphere is something which I have been talking about. Also looking at the AI proctoring, that comes under EI Proctor, and this is for the remote exams, and that's also something which the company is looking at. And the SaaS model is coming up with the long-term enterprise contracts which I had mentioned you earlier, B2B SaaS. Saras LMS is nothing but a learning management system. And apart from these core products, we see there is Open Page also, which is an interaction for the ebooks as well. So in this entire product portfolio, we can see slowly how important they are actually turning out to be. So this is the entire picture coming in for this product space, and we have discussed a lot of it. And lastly, the revenue mix is very much important so that you get clarity of so much products are there, but what are the key products and the revenue contribution. So I have made an edtech services, that's 54 odd %, and assessment, that is something which is almost 29% of our revenue is coming in. So this is the overall revenue mix, and the geography mix, that's the North America one, 63%, and the expansion happens generally in the other markets. India, not so much, it's 5 odd %. And interestingly, the company becomes a beneficiary of a lower rupee, or currently you can say rupee is at the record levels. So that's a kind of a strong up move point for the company as well. But of course, it's a B2B, the pricing power also the company does have in certain contracts as well. But let's go on. We have discussed enough about the company and their wide variety of kind of products. But coming back to the format of the show, it's very much important that you understand there are 8 criteria where we will be getting the company and judging them and giving them the ratings. These are the basic things, but this is the most important. Income statement, balance sheet, cash flow, return ratio, largely number led, but we will be judging the company. Shareholding, street cred, valuation. These last 3 rating parameters, of course, they are having a very small investment horizon period, so our views will change with time regarding the company, and outlook is something which is, we can say, the forward looking statements from the company which we will also judge. So these are the total 8 parameters we will be working on in our show in KYC. But the first parameter let's look at, that is the income statement. We have taken these numbers till FY25. The numbers have been decent. The revenue growth is from 195 odd crore rupees has gone up to 233 crore rupees, and the margins, there was a dip in FY24, but then it's regained back, and that is something which we'll also look at the Q2 numbers. The net profit has also done well. So FY24 seems like there was aberrations in this space, but margins, look at it, that's around 19.3%. So we can say it's almost back to the levels which I had discussed earlier. Sequential growth, revenue has been 16%. EBIT, of course, there are some one-offs also, but overall there has been a significant growth. So Q2 performance has been good. Company has delivered post its IPO. So on that basis, I will give a thumbs up when it comes to the income statement. Also moving ahead from the income statement, let's go to the balance sheet segment. And of course, after IPO, the company will definitely have a higher cash balances also, and the borrowings, that has actually come down from 118 odd crore rupees just at 27 crore rupees. That means the balance sheet's health, that has shown strength, and cash bank balance is there, which is a buffer. In future, they might be used for acquisitions also. That's what I had read when I had been seeing the financial statement and the press releases of the company. So from my side, even balance sheet, the company has done well. So it's a thumbs up coming in. So income statement, balance sheet, looking at these numbers, they have shown a good strength. But let's move on to a third and a very important parameter, that's the cash flows, especially when you're looking at the operating cash flows going ahead. And let's get in the cash flows, how the numbers actually pan out. And we largely see it's been decent when it comes to the operating cash flow. That's around from 55, it's around 52.6. But the cash flow conversion, that has been a kind of a conversion, which was 439% in FY24. Remember, it looks like an aberration here. We'll understand with the management. FY25, it was at 152 odd percent. Largely nothing much to look at when it comes to the net cash flows, because the gyrations are a lot, roughly 14 odd crores, and it's almost down, you can see, by almost minus 12.7 crores. FY25 also, there's no much clear indications of trends coming in. So looking at the cash flows, it's still not giving any signal as such, and because of that, I will give a neutral rating when it comes to the cash flow. The fourth one is the return ratio. That's also very much important. A very limited number we have for this company. FY24 is around 5, but FY25, that has doubled up. This is ROC. I'm talking about the return on capital employed. And let's look at the ROE numbers, how that actually pans out. Over here, that's around 4.4, but there's significant jump coming in. That's almost 10 for these numbers. Largely, whenever you have these companies, we generally look for a SaaS company, B2B SaaS company historically, that at least 15% of ROC should come to the investor. So that's another question we'll ask, whether it's an industry specific problem or company specific problem, whether ROCs or ROEs are not coming on a higher basis. That's something we'll try to understand when we speak with the management on the industry and the valuation. But as of now, I will be giving this company, for the ROE, ROC numbers, still a neutral rating, because industry needs to understand which sector the company is working in, what should be the actual multiple of the ROEs and ROCs, and of course I'll be getting with the valuations also as a parameter. But right now it is kind of a neutral rating. Shareholding, that's also in focus. There is a institutional participation. FIs, it's on the lower side, it's around 4 odd percent. DIs, there has been a good lapping coming in. And look at the market cap of the company, just 1000 odd crore, and DI's participation is 14.2% of the equity stake. That is a very important reminder that there is a good strength coming in for the company, and largely promoters are owning majority of it, 59 odd percent. So it is still decent. Let time decide whether this institutional participation goes out, or we might see some kind of a sell-off in any of the categories. That is something we'll look at, but right now shareholding pattern will be largely neutral coming in from my side. So this is almost, you can say, we have done 4 parameters of it. Moving on, the street cred, that is where my concern also comes in. Post IPO, nothing much has happened. Issue price 120, listing price was good, a small pop, 135 rupees. But then listing premium was down almost from there, number is down 13%. And the listing change which was there, that's also down 28%. So the concern for me is post IPO, there hasn't been any kind of a value creation for the investors. But yes, let's not be harsh on the company, it's just been 45 odd days. But net on the current numbers, the street cred, I will give a thumbs down to the company going ahead. Also, apart from the street cred itself, let's look at the other important kind of criteria which we should be actually focusing on. And I had mentioned you about the valuations. Is this a SaaS company? Is this an IT company? Is this a service company? Or is this a product company? That's what we are looking at. And currently, the valuations data which I have got, MPS is the nearest competitor, and we did an analysis also from the RHP, so that's coming in at 21 times the current P. These are all the trailing numbers which we have got. Remember, there is no analyst coverage, and that's what we bring you in KYC, the companies which are untracked, where alpha might be there in the future. Excelsoft is at 30 times, so that's my concern as well. With time, of course, we'll understand what's the actual industry valuations, and then maybe we can judge the company more better. But right now, as of now, I'll give a thumbs down when it comes to the valuations front for Excelsoft. Despite the correction from its IPO prices, there might be some expensive pricing in the IPO getting factored into the markets, but of course there is industry headwinds also. Also, let's move on to the 8th and the last parameter, outlook. This is one of the most important things for a company which is not tracked. That is something which we always look for, and we always tell managements to come and talk to the entire ecosystem and the stakeholders. Strong traction coming in the educational tech services. Recently, even Physics Wala was launched, so that's another angle, but this company is product based. Let's get on to the other outlooks. There is a sustained uptake coming in the learning and assessment platforms going ahead across the markets, but the learning is just not happening in North America, it's happening all across the world. Enterprise skilling and verification ecosystem is being built worldwide, and the strategic acquisitions, that's also very much important since companies having a decent cash pool, so they might expect some more edtech related acquisitions, and when that happens, it becomes margin accretive as well. The new markets, Egypt, France, Italy, Brazil, Philippines, they look very different, very varied, but it's good to actually branch out from the traditional North American markets. Roughly 64% of revenues are still coming from there. So that is something which we'll be asking the management also regarding their expansion plans. Now you must be wondering, we have spoken so much about the parameters, what are the overall ratings? So let me summarize it for you. Largely income statement, balance sheet has been good, so we have given a strong thumbs up both sides. Cash flows, return ratios, they have given us mixed signals, so it's a neutral rating from my side. And moving ahead, the shareholding pattern and the street cred, that's also a concern for me. And valuations, still not, the market has not discovered the industry, or you could say the multiple, but overall it still seems overvalued. I've given a thumbs down, but outlook is something I'm very bullish on. And net overall, the KYC rating I have given is 4.5 out of 8. This is largely, we could say, in line or towards the higher side in our general ratings which we give in KYC rating. The company in focus is Excelsoft Technologies. This is a largely small cap IT company, but it's dealing in a niche segment. The company calls itself a B2B SaaS company, and education training, that is something which the company is looking at. Company's nearest peer is MPS, but no major performance has come in post its IPO. Just in November it was listed, stock is still down from its listing price more than 20%, but we had done a rating parameters, income statement and balance sheet was really strong. So I've given a +1 to both of them, and the cash flow return ratios largely neutral because of divergent analysis which we had done. and looking at how the shareholding pans out. Let's give it some more time to the company. Street cred. On the negative side, valuation still it seems expensive as compared to peers, but outlook is something which I am very bullish on when it comes to the company. So net I have given 4.5 out of 8. But to understand the other side of the coin, we are joined in by the management, Dhananjaya Sudhanva. He is the chairman and managing director at Excelsoft Technologies, and Prashanth HM. He is the head of strategy at Excelsoft Technology. A very good afternoon to you, both of you gentlemen. Mr. Sudhanva, I would like to start with you. The street is getting a new type of a B2B SaaS product in the markets. This is your company, Excelsoft Tech. Now, if you had to put in the growth guidances, you could just explain the company a little bit about what the company is all about and the growth guidance, especially revenue and the margin front, then we'll start.
The company is about developing technology products compliant to vertical SaaS so that we can create multiple tenants for multiple customers. There are two areas in which we build technology products. One is in the learning space and the other one is in the assessments and testing space. It's not one technology product, it is a suite of technology products that are required to make sure we cover the entire gamut of online digital test and assessments. Also, a number of technology products together covers the entire gamut of learning online. I'll take the first example of learning online. It's been there for a while. We've seen open source models like Moodle and many others. I think the more recent evolution has been that learning content is bite-sized. They are not anymore full courses that become available online. It's also that the learning experience gets personalized.
All right. Yes. Prashanth, I have a question. Since you are doing a lot of strategy growth for the company, I just have a query that the rupee is at its record low levels. Any kind of tailwind we can expect in the financials in Q3, Q4? How does this actually work for a B2B SaaS kind of a player like yours?
Yeah. Sharad, good morning. Yes, of course, you are right. Dollar getting stronger by the day means that our revenues will have a slight upside from the conversions. Yes, lots of our revenues is in dollars today, although it is from multiple geographies across the globe. Dollar rate has a positive impact. Yes, you're right.
Yeah.
If I can add, the weakening of the rupee, which actually will deliver more notional profits in the balance sheet. Because the advantage of the dollar rupee exchange rate, which is right now to our advantage, cannot be captured as revenue from sales. It is still revenue, but will be called out as notional revenue in the.
Yes, Mr. Sudhanva, there is a cash balance also of the company. Recently, the company came with its IPO as well. Are you looking for any acquisitions in the tech space?
Yes, the cash balance, the internal accruals in Excelsoft is meant for acquisitions in territories that matter to us. Right now, we are looking at two geographies. One is the US and the other is UK. And we have an investment banker out of the UK who is showing us, and we are discussing with companies both in the UK and US for potential acquisitions.
And Mr. Prashanth, the question is, what's the margins outlook going ahead? Because a lot of viewers have asked us regarding this, regarding the company, that what's the margin growth outlook guidance going ahead?
Right. If you see what we have delivered in the last year, FY25 is 31% on EBITDA and about 15% in PAT. Going forward this year as well, the traction of 31% is definitely there. In fact, we are looking at over the long run an expansion in the profit margins. We are looking at nothing less than 35-36% over a period of 3-4 years. The reason being multiple. One of the reasons is, of course, we are looking at a growth on the revenue side. While the revenue grows, the expenses do not grow proportionately. So that is one of the reasons. The second reason we are looking at is an increase in the license revenue. When there are license revenues, the costs associated with such license revenues is not proportionate to the revenue. So it's much lower. Therefore, there will be an expansion in the margins. And thirdly, what we are looking at is obviously productivity and efficiency in all round, including our development.
And yeah, and Mr. Sudhanva, one final question. There's a product called AI Levate that gained my attention, and a lot of Gen Z folks also told me about this product. What is this actually all about? If you could just explain us in short.
Yeah, I'll try to be as short as possible. When AI became a reality, our strategy was to build a complete AI stack, including the hardware. So we have a GPU farm, a number of GPUs in-house, and we use multiple LLMs. We could use Google's Gemini. We have running on a couple of GPUs. We have Mistral running on a couple of GPUs. So we basically have most of the LLMs already installed on our GPUs. That gives us the flexibility to take a problem we are solving in the area of assessments or learning, to pick and choose which learning models, like LLMs, we want to use and properly sequence it to achieve
Yes, thank you very much, Mr. Sudhanva, for giving us this entire AI setup and also the strategic outlook. Prashanth, thank you very much as well for your views, for the growth outlook and the strategy for the company going ahead. Well, that's all for today. Excelsoft was in focus in KYC. Stay tuned to NDTV Profit.